Hey everybody, welcome back to CRL. This is Chart Request Live, the show where you provide the requests, we provide the charts. I'm Spencer, that's JC. You know the drill by now. If you don't already, if you have a request for us, shoot us an email. We go through our email inbox first before at the beginning of every episode. Questions at stockmarketmedia.com. I have about 7 or 8 requests from the inbox. We will get to those right now. After that, we will get to the requests in the chat. So if you have a request, drop an email, drop in the chat. We'll cover as many of them as we can. JC, are you ready?
I am ready. We were just talking backstage about video game stock, so I'm excited.
Well, we got a request from Alexis to look at Take-Two, also like a random Canadian gaming stock I never heard of before that trades on the TSE. But let's start with Take-Two, the one that we've actually heard of.
Well, here's Take-Two Interactive. You're a younger man than me, so you could probably tell me more about these video game companies and their games probably better than I can. I haven't played video games in over 20 years. We used to play what was the one we used to play? James Bond, the Bond, right?
Oh, GoldenEye.
GoldenEye. Yup, we played GoldenEye.
Yeah.
Yup, we played Madden and GoldenEye. Those were, my college games. So anyway, here's Take-Two. I don't know what games they have. This is above my pay grade, but
Grand Theft Auto.
These are really, that's Take-Two? Oh, that's cool. I played that one back in the day. So here's Take-Two, and these are long-term structural uptrends. EA is another great example. I would put them in similar categories. EA slightly stronger, I'd argue, as it's closer to new highs. You can see here EA very just threatening already to break out. But these are secular trends in video games, and these are, Take-Two's 26 billion, EA is like 38 billion, something like that. These are pretty big companies. And, I'm no fundamental genius, but, these seem to be trends that I probably don't want to fight in terms of human behavior and participation around the world and, e-gaming and sports. Like, just looking around, these look like massive trends. So again, not something I want to necessarily fight. And when you look at the prices of the stocks, it sort of reiterates that the trends are not down here. So I think there's going to be a big renaissance in these video game stocks making new all-time highs. I think that's part of, that could be one secular theme in this ongoing bull market that can last several years into the future. Video game stocks being, cool again, right? Because you were talking about how video game stocks used to be cool, and now they're not.
They used to be. Well, there was way more of them. There was Activision, they're off the board. Right. There was Glue Mobile. They made mobile games, they're off the board. There was at least another one that I'm thinking of that was off the board. Now, Activision bought King. That was a big one at the time. So that was like 8 years ago. But anyway.
Here's Nintendo. Here's a Japanese name that we're all quite familiar with. And they're bigger than EA or bigger than EA. They're bigger than Take-Two, 53 billion in market capitalization. So these are big companies. Then here's another one, Capcom. This is an $8 billion name. Capcom also, you could see that big structural uptrend over the years. So, if you want to dive deeper, maybe a little shorter term, let's see. Oh, maybe look at a weekly chart of Take-Two. And look shorter term. Well, now we can really sort of look at some support and resistance, right? So I think that this is a good way to sort of explain how we, look at the markets, we behave, how we analyze the behavior of the markets, as we want to look at what the groups are doing. If we're looking at a chip maker, we want to understand what that stock is doing within the context of how other semiconductors are behaving, right? I think that's really important. And the video game is no different. And we also want to look at it compared to what other communications and consumer discretionary type stocks. These are all communication stocks, it looks like. Take-Two, also communications. Yep. So they grouped these video game stocks into communications. I'd argue it's part of the consumer as well, but hey, to each his own. And I think, this 150 level is probably a pretty good one. If we're above 150 from the long side, Take-Two here, with a target up near 200 or so. For now, understanding the secular trends are up, my friends. And I do think we see an all-time high here. EA as well. I think a new all-time high here is coming, in my opinion, probably faster than it's coming in Take-Two. But if you like Take-Two, you really want to see how EA is behaving, because if EA is breaking out, you're going to see some sympathy buying in, for sure. in the take two. Look at that. So,
It's been a very tough 5 years to own EA. I used to own one of these ETFs. I think it was ESPO a little while back. Sold that guy. All right, let's move on here. Mark emailed us asking about Datadog, DDOG. So I guess we're staying in software-ish tech land a little bit here. This daily chart, the 1 year chart is gappy as ever.
what's the name of the what's the name of the stock?
Datadog, DDOG.
Yeah, sure.
Yeah, it has gaps all over.
This is a darling of the pandemic, right? I remember it well.
One of many, yes.
Sure. But this was, I mean, this is, when I think pandemic junkie stocks, this is like top of mind, right? I mean, just because the name itself, like Datadog, like that's just, kind of funny, because I'm a child and I laugh at silly things, but this is really what it looks like to me. And, this could potentially be one of those maybe non-head and shoulders tops, how we talk about a lot of times. People are always, quick to point out these potential topping looking patterns, but the truth is asset prices, historically trend. They don't reverse. So if you're, regularly looking for, reversal patterns, you're defeating the entire purpose of what we're doing here in the first place, which is looking for trends to take advantage of. So, someone might look at it like this, say, oh, potential head and shoulders top. I don't look at that, really at all. I look at it really as a healthy consolidation is really what it looks like to me. And, maybe my theory is correct, maybe it's incorrect, but I'll tell you this much. If we start to take out these levels right here near 120, now you can make the case that that's exactly what it is, that this is just a consolidation after a massive run higher, from the IPO price at 40, that was what is that, a 4-bagger, 4-5-bagger? Monster move. Well-deserved digestion in an environment where these types of stocks got hit, right? Datadog is at 36 billion, actually a bigger market cap than I thought. Software, of course. And, that's really the big level to me, 120. We start clearing 120. I think you got a clean run towards 200. We'll see what happens after, from there, but the trend here is higher.
All right, I don't usually cover more than one request from the same person, but for this one, I make an exception. So Mark also asked about SkyWest, SKYW, a tiny $2 billion regional airline company that I forgot existed, frankly. I forgot the stock was around.
Because you knew it existed?
No, the company, yeah, but the stock, I forgot this was like a stock because it,
$2 billion market cap, Utah airline.
Right. I just want to hear your thoughts on this one. I think this is a funny chart.
You think it's a funny chart?
I mean, yeah, I feel like zoom way out. You just like, I mean, it's like a parabolic crash. It's
I see what you did there with these plane companies. I see that.
Yeah.
Poor taste there, Spencer. Poor taste.
All right, fine.
Listen, I think there's a lot of resistance here from the early 2000s, right? And kind of caught there in the pandemic, and broke down then again last year, as you could see here. Now we're back above those levels, so I think we're probably going to make a run back towards those highs. Is what it looks like to me. Back up towards the high 60s, 67 or so. There's really no evidence suggesting that it won't. It's a tough bet here. I mean, here we could sort of zoom in a little. We could look at a weekly chart. Target is 67 up there. This is SKYW. Yeah, I mean, you could really see all of that resistance up here, see?
Yeah.
Right, so I mean, that looks like we could potentially head down towards there. So, but in terms of a new entry point, maybe short term, maybe against 45, if we're above 45, you can enter a new long. Here we are at 46.5. So in the very short term, trading it against 45, below 45, it's a mess. Above 45, target of 67. That's not a bad trade. It's not a bad trade. You're essentially betting. This is a little bit of a bull flag on the way higher. I don't hate that trade. Long against 45. Yeah, I don't hate that trade.
What about for Dan MHO? This is like a home builder, I think. think it's a home builder.
Yeah, M Homes. Oh yeah,
Yeah.
Secular leader for sure. So M Homes, $3 billion residential construction out of Columbus, Ohio. Shout out to the Ohio State MHO.
Columbus also like America's test market, apparently.
Is it?
Yeah, I think like lots of new products and things and foods get tested in Columbus first. For
Who knew? Who
whatever
knew?
reason.
Huh?
Yeah.
I don't know
The
if
more
that's
you
like
know.
a good thing or a bad thing. Like, do I want to be the guinea pig all the time, or is it cool
I
that I
know.
get to try things first? You know what I mean?
See,
Like,
seems cool to me. I've never been to Columbus, but seems like a cool town.
I went to an Ohio State Miami game years ago. We lost. It was loud as hell. I've never heard a stadium that loud before, by the way, which is really interesting. So we can kind of just extend from here. That's what that looks like to me. 95 is a big level there. Struggled against that. Looks like your next extension is about 150 here. So there's your target. You're above 95, 96. If you really want to get fancy, you could really trade it against 100. That's probably your level. $100. You can zoom in here, right? Get a little closer, right?
Yeah.
Against 100, long against 100, target near 150. Yeah, I like it. Yeah, $100. That's your level. Above 100, long all day. Target of 150. Good group. Home builders continuing to act strong, right? We're in the middle of a bull market. Home builders tend to do well in bull markets. I guess people need homes to be built, apparently, in bull markets. But you just go back and study in history. In bull markets, consumer discretionary stocks in general tend to do well. These being exhibit A of consumer discretionary.
Yeah. Okay, for Gerbier, support and resistance in Tesla, please.
Ooh, Tesla. I feel like I don't get asked about Tesla like as much as like I used to in the past,
Well, it's maybe because it's not going up 500% like it was in the past.
Nice long multi-year consolidation, well deserved. How do you like this chart here there, Spencer? You like that?
Yeah. I mean, look, that's a very fun chart. That is a very fun chart.
You think it's just a coincidence?
I don't really know if it means anything. Yeah, but it's fun. It's definitely fun.
We like to have a good time around here, Spencer.
Yeah.
And listen, if we're above 180, I think the risk is to the upside. Target near 400. Right? These are these highs right here. Is that 400? Do I have that right? Yeah, 407. Yeah, $400. I think that's the level. 180. We're above 180. The risk is to the upside. That's it. These are long. Right. This is a long-term secular uptrend. Do I have to remind you? There's a reason why Tesla is a darling. Like, hello. Oh, you know what I'm saying? Like this is not a downtrend, right? Tesla's now whoopsie daisies, right? Tesla is how big is Tesla now? How many market cap? Trillion?
Is it? It's not. It's not still there.
765 billion. 765.
Yeah,
it's slightly smaller. It's slightly smaller than Bitcoin.
Yeah. Oh, that's all right. Then that makes that chart even more interesting. How about that?
Yeah, because they're right there. Like if Bitcoin was an S&P 500 stock, it would be like the 7th or 8th right now.
Yeah. Okay, we're not going to look at this small biotech that we got emailed. We do have standards here. We don't look at stocks.
How bad was it? How bad? Let's rip them. Let's make fun of them.
It's above $1 billion, but it just
what's wrong with that?
Well, it doesn't trade a lot, and I mean it's
try me.
All right, it's gone from 71 to 4. So
what is it?
Like it's ABCL.
ABCL, ACCL Biologics. All right, ABCL.
And
this thing does trade, by the way.
I only have data going back to 2021, so this must have been an IPO then or something. But
well, this is one of the most spectacular losses of capital ABCL. This is just a fantastic example of why you really want to manage risk, because there's really been absolutely no reason to be long. This has been a downtrend since it first got started, right? This thing's always been in a downtrend. And when did it IPO? Oh, what do you know?
2020?
Right at the beginning of 2021, biotechnology peaked. You guys want to really, if you really want a fun chart here, Spencer Israel, you could really just overlay. See, am I cheating now because I know the answers? Oh, look at that. I mean, just, you think this is a coincidence, Spencer? Come on, what are we looking at here? We're looking at the XBI.
What is that? I was going to ask you, is that the IPB or the XBI? It doesn't really matter, does it?
Doesn't really matter, right?
Doesn't really matter. Look, one of these years, biotech is going to, turn around. It's very cyclical, extremely cyclical. But
so it's not that ABCL invented a new cancer. It's just that money's flowing out of out of biotechnology stocks. I mean, they literally look exactly the same. So this is less on ABCL and more about the fact that the sector's out of favor. You know
what? That logic applies 98% of the time. Would you say it's not about your stock? It's about the industry or sector that your stock is in. Is that fair?
I wouldn't go that far, but there are some popular sayings that mirror what you're trying to say by some very famous investors. Yes. Okay.
Let's move on here. What about for Wavy? He either wants to go long or is long. Harmony, HMY.
Oh yes, of course. Oh
we haven't been talking about gold too much. Well, you know what? We've been talking about how we don't talk about gold. So
no, I mean, this is South African. If you don't have enough South African gold exposure, this will get you done.
I don't have enough.
Does anyone really have enough South African gold exposure? Is really what I want to know. No. So this one, $3.5 billion, of course, from Ran Fontaine, I guess, in South Africa. And who the hell knows what they got going on? But I'll tell you what. I'll tell you what. Industry. It looks better. It looks better than a lot of other gold stocks, which has my attention. I think there's some better looking gold stocks, but this is and there's slim pickings in good looking gold stocks, but this is probably in the top 5 looking gold stocks in terms of relative strength in the space. But again, these are the implications of being in a terrible sector where money is fleeing from, not joining, right, Spencer?
Yeah.
Like the biotech chart we showed before.
Mm-hmm. That's right. Okay, let's do one more.
7, wait, I'd like to see it above 7 is my answer. Right now I understand it's nowhere near 7, it's 5.5 or something like that, but it's a mess in between.
All right, last one from the email, and then we'll go to the chat. Let's look at Intel for Joseph. Is this going to be Intel's best year, just in terms of just annual return, in a very, very long time? And yeah, it will be. Probably since at least 2017, if not earlier. I don't know, 2014.
I mean, let's see. So this is where the market was in 2000.
Right. We all know, JC, we all know that.
I mean, what I want to reiterate here is this is what I'd like to reiterate. So while Intel is lollygagging over here, everybody else is making money, right? This is the NASDAQ 100. It exceeded those 2000 highs in 2015. Intel still just doing whatever Intel does here. I mean, just a nightmare, right? The NASDAQ 100 has gone on, is making new all-time highs, basically, pennies away. Look at Intel, struggling. So that's what it looks like here in the short term. And, let's zoom in a little bit, which is what I think. But I think it's important to kind of put that in perspective, right, Spencer?
No, I mean, of course, you always want to compare a company to its peers, a stock to its larger industry group.
So now let's
It,
remember,
it doesn't even have a good dividend. So
it just
I don't know.
sucks. You know,
It's got a yield of 1.1%. Who wants that?
just
Like
sucks.
yeah. Anyway.
But you know, one man's garbage could be another man's gold.
Look at like I said at the top, it's had a good year. It's had a very good year. Maybe not as good as
Well,
not as good as the Qs.
Well, a lot of things have had a good year.
That's true.
And this has had a better year than the Qs, just to be fair.
Has it? Oh, look at that.
Yeah. Yeah, this has had a better year than the Qs. Went from 26 to 44. Right. No, doesn't that put it? Either way. Right. It's kept up very well, which is surprising to your point. But this is probably this is probably the short term here. It's probably a good look. Right, you've got all of this support here, right, near 44, 45, right? Plenty of support, multiple times. See it again and again and again. Yeah. And then we ultimately broke, of course, as we can see here. And now we're back to the scene of the crime, right? So are you just going to assume that we're going to rip right through that level like it's not even there? Or do you think the market's going to respect those former support levels? I think it does. By the way, Intel, 183 billion. So here we are ripping it for sucking so much. 183 billion. Wow. Yeah, I mean, huge market cap.
I've still got the Intel Pentium 4 processor jingle in my head from all those years ago, right?
I don't even know what that is. Is that a video game thing?
No, it's like from the commercials. They had a jingle.
Did they?
It was like 5 notes. Anyway, that's how big they were. Is only 20 years later, the jingle is still in my head. Let's move on here. Let's go to the chat.
below 44, 45, it's tough. 44, 45, that's really my level. Below that, it's probably going to be messy for good reason. There's a lot of support there over years. Yeah. Think about it. Support there from all of 2018 through 2020. I mean, that's 3 years of support, and then we broke, and this is our first test of that. So, to bet that we're just going to rip right through that, it's probably a tough bet. It's not one I'm going to make, but I will tell you, if and when we break out, and chances are we probably do break out above those levels, whether it be a few weeks from now, a few months from now, a few quarters from now, a few years from now, if and when we break out above those levels, that could present a very, very nice trade. So I would set my alerts above 45.
Wavy knows the jingle that I'm talking about. Yeah. Okay, moving on. Let's go to the chat here. Who was it? Daniel is sitting on some short-term trade profits in Square. We obviously can't tell you where to sell, Daniel, but he wants to know where overhead supply is at in
overhead supply on the old Square.
Yeah, short-term.
So Square sitting at 35 billion. San Francisco software, of course. And just a great example of what's happening here. This is ARC, just FYI. So this is Square overlaid with ARC. You want to talk about a symptom of sort of where it lives.
Yes. Yes, we know.
That's a great example. What?
Yes, we all know that Square stinks or has stunk.
Well, it's not so much about Square as it is really about these types of companies, right? Yes. So, looking at it on an absolute sort of basis, that's probably about right. You had some failed breakdowns here.
What's that, 80? What is that?
So you got your support right around 53, right? Right around 53, and then your resistance right around 85. So 53 and 85. Those are probably your levels right there. That's what that looks like to me, playing that range. I mean, I think there are easier trades. There's probably higher probability trades. If you're looking for a stock to represent a mean reversion in ARC, I don't hate that at all, actually. So using Square as a vehicle to express that thesis makes sense. Here, let me just show you what's going on here. So we could just make a quick chart. We could just end here. Quick lesson on relative strength. So we're talking about Square as really a representation of ARK. So you're going to get more beta in the actual equity than you are in a diversified ETF, right? Is how I would look at it. So here's a ratio of ARK to the S&P 500. So let's just this is how the sausage is made, folks. This is how the sausage is made. You like that, Spencer?
I'm watching.
I'm pretty quick, you know. I could be a lot slower. Wow. So here's ARK SPY, right? So here's what we're looking at here. So here's ARK SPY. And, you know, when you look at the all-time lows, you know, we're coming off those, right? So if you're going to bet on a mean reversion in ARK relative to SPY, you know, I could think of worse places to do that from, right? And if you really want to get kind of, you know, I was gonna overlay something else, but this is enough. You know, we're in the lower ends of this, so a mean reversion in something like this is probably not a terrible idea. Using Square as a way to express that thesis, also probably not a terrible idea, because I showed you the correlation is so strong there. So kind of just one way to look at the market. We do this chart request live, you know, to talk about individual names and charts and stuff like that. But we're not just gonna, I don't want you guys to think that we're just like making it up and like it's just that one chart, which is why we do everything. It's about putting things in perspective and then using these different stocks as vehicles to express a given thesis, right? There's a lot more going on behind the scenes. So when you ask me about Square, here we are looking at an ARK SPY ratio, which I think is going to be a larger driver of the direction of Square than anything that we might find on a chart of Square on its own.
Yeah. You know what, JC, let's just do one more because I just want to get something right said here. We had a question about Eaton, ETN. Who was it? Was it Yako looking at he's looking for a longer term target. He's been a long ETN since 105. So he's up a lot. He's more than doubled his money. And he's looking for maybe a longer term target here on ETN.
Eaton, just a monster industrial stock. I think it's like from like Michigan or something like that. Or Pennsylvania or Ohio, you know, one of these, you know, when you think big, you know, manufacturing industrial sort of states, this is from one of them. Let's see how close I am. So Eaton from Dublin, Ireland. I doubt it. This is one of those that's actually based in Dublin, but I'm pretty sure there's somewhere in there. Either way, this one, about halfway to our target, up near 270. You know, this one's been one that we've liked for a long time, obviously, you know, showing a ton of relative strength. You know, when we look at something like Intel stuck below those 2000 highs, you know, something like Eaton, when you compare it to former big important cycle highs, it's well above those, you know, that's evidence of relative strength. Eaton is certainly one of those. You know, that 270 area up here is a next extension for us.
All right, we do the show twice a week, every Tuesday, every Thursday at 1 o'clock Eastern time. JC joins us on Tuesdays. If you want more of JC's opinions, his thoughts, his research, just more access to JC, you can get it. We don't like keep JC locked up in a basement. That's impossible. But JC does run a service called All Star Charts. He's doing a Black Friday sale. Obviously, this is the year for that. So if you go below, scroll down into the description at the very, very top, the link is right there. It's get.allstarcharts.com/Black Friday. The sale ends on Friday. On Black Friday. That's when Black Friday sales usually go. So check it out. All Star Charts Premium, Black Friday sale. Get it, got it, good. You can get a lot more JC in your life if you want that, because we can't get to all the requests on this show. We don't have time. We're gonna stop right now, frankly. I know there's like 6 more in there. We're not gonna get to. I'm sorry. So you have to come back another time, or just get JC's thoughts whenever he puts them out every single day on All Star Charts. So that's what I got. JC, any final thoughts? Or are we good?
That's it, man. You know, listen, It's a bull market. And people are like, well, JC, it doesn't matter if it's a bull market or a bear market. You know, trade what's in front of you. Like, I get all that. But understanding the type of environment that we're in can help us figure out how to best allocate our time. Should we be looking for stocks to buy, or should we be spending more of our time looking for stocks to sell, right? Should we be looking for sideways ranges to sell premium? Like, what is the strategy for this environment? And we continue to get paid and rewarded for finding opportunities in stocks to buy versus some of those other types of strategies that are best served in other types of market environments.
Okay, I saw a comment in the chat that the link is not working, so I just refreshed it and try it now. It should work. But the link
Adios,
is right
guys.
at the top there. All right, thanks a lot, JC. Everyone, happy Thanksgiving. Well, we'll see you guys tomorrow morning for the morning show. Have a good one.